You know, every week in the markets has its own rhythm. Some weeks are noisy, unpredictable, and choppy. Others, they feel like a perfectly composed piece of music where every note lines up and every beat makes sense. This past week was one of those weeks where the market story was clear, if you knew how to listen. From Monday's quiet build-up to Tuesday's textbook setup to Thursday's rare opportunity to catch both buy-side and sell-side deliveries in the same day, there were lessons, confirmations, and a few moments that reminded me why I love trading ICT concepts. So let me walk you through exactly what happened, day by day. The thought process, the setups, the execution, and what the market was telling me every step of the way. Monday, August 4th, the week started calm. No major news events to shake the market fundamentally, but I came in with a bullish expectation. Here's why. On the daily chart, last Thursday and Friday were heavy bearish days, especially Friday where we saw an aggressive drop that cleared out a lot of liquidity on the downside. That drop left a volume imbalance between Thursday's close and Friday's open. From my understanding of ICT's weekly and daily market profiles, I expected Monday to push higher intraday, aiming to fill that imbalance. Even though the market opened with a continuation pattern from Sunday's conditions and began pushing up, I waited for a clean setup to enter. And this is key, like even when I knew price was likely to rise, I didn't just jump in without confirmation. Monday never gave me a valid entry, so I let it pass. Discipline over impulse. Tuesday, August 5, Tuesday brought no high-impact news except ISM Services PMI, but my bias shifted bearish. Why after Monday filled that volume imbalance, I expected a strong rejection and retracement on the higher time frame. A healthy pullback in the middle of the broader buy-side delivery. Asian and London sessions were slow, just sideways consolidation. But that sideways action built a clear buy-side liquidity pool above. In New York, price tapped that liquidity, then shifted market structure to the downside. That was my trigger. I measured my OTE from New York's high to the low of the market structure shift, placed my entry on the breaker block stop loss above the high in TP at the 100% OTE level. Price tag my entry gave me a little heat toward my stop, but I trusted the read. A few moments later, it dropped aggressively straight into my TP. Beautiful precision. Wednesday, August 6th. Still no major news, but we were firmly in the buy-side delivery phase of the market maker buy model. One detail stood out to me. Tuesday's retracement candle body closed above the consequence encroachment of Monday's volume imbalance. And if you watch my candlestick behavior video, you know, the body tells the story, the wick makes the damage. On the 15-minute chart, I spotted relatively equal highs between Tuesday's retracement and Wednesday's London high. That was a clear buy-side liquidity pool waiting to be taken. London created the high manipulation in place, and then price formed an inversion fair value gap. In New York, we came back to test it and started pushing up. I waited for one more confirmation, and then it happened, a clean market structure shift to the upside. I measured my OTE from the low to the high of the shift, placed my entry in the inversion fair value gap TP at 100% OTE. Price reacted instantly, tagged my entry, and shot straight up into my target. Thursday, August 7th, this was the day of the week. The market delivered both buy-side and sell-side setups, something you don't get every day. We had major red folder news lined up: BOE monetary policy report, monetary policy summary, MPC official bank rate votes, the official bank rate itself, BOE Gov Bailey speech, and U.S. unemployment claims. On higher time frames, my daily bias was neutral. I was only looking for clean reactive conditions to trade. The first came during New York after London had taken the session highs, buy-side liquidity, and price reversed, creating a propulsion block. I measured my OTE from the high to the low of the block, set my entry on the propulsion block TP at 200% OTE. Price tagged me and moved cleanly and smashed my target without hesitation. After delivering the full 200% and collecting enough sell-side liquidity, price reversed sharply. I wasn't about to let that second move pass. Price formed another inversion fair value gap. I pulled my OTE from low to high, entered on the gap, and targeted 100% OTE. Another perfect reaction. Price respected the level, tagged me in, and went straight for my TP. Two clean controlled trades in opposite directions. One of the most satisfying days I've had in a while. Friday, August 8th. Friday was more of a watch and admire kind of day. Price delivered exactly as expected, taking the overall high and making an all-time high. I had no reason to step in and force a trade. Instead, I just called the price action and observed. Sometimes the best trade is the one you don't take. Looking back this week reinforced a lot of what I already knew. Patience, precision, and reading the story the market tells you each day. The setups were there, the logic was clear, and when the conditions aligned, execution was straightforward. The big takeaway: you don't need to trade every single day to make the week a success. Monday and Friday, I didn't take a single trade. but the discipline to wait for Tuesday, Wednesday, and Thursday made all the difference. That's the beauty of trading like a market maker. You let the market reveal its intentions, and then you step in with confidence when everything aligns.